Hi, my name is Brandon Young. I'm a wealth manager here at Willis Johnson Associates. I want to help you make this decision. Educate yourself before you make this decision. So this is what we're going to talk about today in this video. If you joined us in our last BP pension video, you're aware as interest rates go up, your pension dollars go down, and vice versa. Over the course of the last few years, we have seen interest rates skyrocket dramatically until stalling out late in 2023. Most of this year, we've been waiting for rates to finally come down. This kind of contradicts how we look at the investment side of the equation. We are strategic investors, meaning that we are never trying to time the market. But in this situation, aren't we trying to time when we take our BP pension? The answer to that is yes and no. I want to take a look at the rest of the pension data and help you make that decision. As I mentioned earlier, if you look down here, you'll see rates have climbed dramatically until stalling out late in 2023. This was actually the fastest rate hike in recorded history. The Fed has the idea that they want to lower rates, but they're going to do so in a very conservative manner. This kind of contradicts what the market wants. The market wants the Fed to move faster. The Fed does not want to repeat what we saw in the late 70s and early 80s, what led to a hyperinflation market environment. Over the long run, we expect rates to stall out at around 2.5%. Now, if you're planning on taking your BP pension soon, that doesn't necessarily help you make that decision today. The good news is, don't have to make your decision today. What I want to do now is let's take a look at a couple of examples. Okay, so let's picture this. You're retiring in October of 2024. You have a handsome $2 million cash balance pension waiting for you. Do you exercise it now or do you wait? One option is to consider retiring now from BP, but then defer taking the lump sum pension at a later date. So let's look at these scenarios. If we look at scenario one, this is our current interest rate environment. If you're planning on retiring August 1st and taking your first BP pension payout on October 1st, BP does a 4-month look back, meaning they're going to look at your June 2024 segment rates, which are listed right here. You'll see these rates are pretty high. What we did is we compared those to a potential 1% drop in the future. What that 1% drop does is pretty dramatic here. You'll see just a 1% drop in interest rates equates to an additional $200,000 in your pension lump sum. Now here's the question, do we expect rates to lower in the future? The answer to that is probably. Here's a crucial thing to note. With that $2 million cash balance, that number is locked in. If we were to use the segment rates listed here for June of 2024, the calculation would actually give you a balance less than $2 million. But with BP's RAP pension, that $2 million is locked in. This is significant, and it's helpful because this will help you make the decision on whether to take your pension now or take it later. If you take it now, you still have the option to invest those dollars. So how does that impact things? If you were to invest the $2 million, you would need at least an 11% return in order to break even. The average investor returns about 3.6%. So there's a significant difference there. If you were to look at a long-term investor, a buy and hold investor in a 50-50 portfolio, your average return there is about 8%. So I think what this tells you is that there is power in waiting to take your pension, allowing interest rates to come down. As always, we never want to make a decision like this in a vacuum. We always want to evaluate the various components before we decide what to do. Thank you for your time today. If you enjoy the content, please like and subscribe. Our goal as financial planners is to make the complex simple. I think this is a great example of that. Connect with us online and stay up to date with our insights. Thank you.